Analysts are cautiously optimistic on Singapore's stock market for 2022 after a relatively good performance for equities this year. Banking and travel-related stocks are among those that did well, and market watchers are expecting them to shine in the year ahead. Clara Lee reports.
David Kuo's investments are getting a second wind in 2021. After a poor showing last year, he's reaping the rewards of a more diversified portfolio.
Sure, there were some sectors that didn't do well, but you don't expect all the sectors in your portfolio to be firing on all cylinders all the time.
The benchmark Straits Times Index tracks the performance of the top 30 companies listed on the Singapore Stock Exchange, but it ended 2020 as the worst performer in Asia. The stock market hit a decade low last March, falling to 2,208.42. But this year, things seem to be looking up. The STI hit a high of 3,273.54 in November, and analysts say this is on the back of a reviving travel sector.
We see the reopening place and travel-related stocks performing exceptionally well. Counters like ST Engineering, SIA, SATS, ComfortDelGro, and even Genting Singapore also perform exceptionally well.
When Singapore announced the move towards its endemic phase, SIA's stock price took off by 9 percentage points. It closed at $5.52, the highest it's been since April this year. Mr. Chua says the government's plans to resume cross-border travel will fuel tourism-related equities well into next year. He also foresees some relief for the construction sector.
Contractors are still hit by a brick wall of rising material costs and the shortage of manpower. Analysts say the prices of construction-related stocks have dipped by around 4.4% so far. But with borders reopening, they say investor confidence may rise. In fact, some expect a 10% uptick in stock prices come 2022.
The banking industry is also picking up steam. DBS's stock price rose by more than $6 since last December to reach around $31. Economists say this is due to greater investor confidence. Increased consumer spending and demand for wealth management products also boosted earnings. DBS, OCBC and UOB, which make up about 40% of the STI's trading volume, are expected to pull the stock market further.
What can be a tailwind for banking sectors could be in terms of the normalization of a monetary policy. So as we see further tightening of policies, that generally bodes well.
But some analysts warn that the Omicron variant may throw a spanner in the works.
There's three things that we all need to know about Omicron before we can really determine what the full ramifications are. How transmissible it is, how severe it is, and how effective the vaccines are to it.
Still, market watchers think they have much to look forward to.
That is not to say that COVID-19 won't come up with more variants that will somehow delay the recovery. I think one thing we have learned is that economies are a lot stronger than people think.
Mr. Kuo adds that he's very hopeful for 2022 and expects economic activity to continue improving.